It's all yours.
Thank you, Hubert. Can you guys hear me? Just a quick sound check just to make sure we're all good.
Sound good, man.
Perfect. Thank you, Hubert. And to answer Hubert's question, I am in West Palm Beach, Florida right now. I do spend a lot of time in Europe still, but yes, it was a lot of fun to meet everyone, Hubert, Jeanette, Todd, that just presented. Great presentation in Vegas that was last week actually, Hubert, I believe. Anyway, guys, hope you guys all had a great Thanksgiving, and I'm excited to present here today. I know in a very exciting lineup. We already heard from Rob and Todd, and there's a lot of good stuff coming up here. So what I'm going to talk to you guys today is about candlesticks, and I will sort of give you a quick sort of preview on this. It is possible that some, maybe just a few of you, have seen an initial bit of this presentation before, but you've never seen the second part. Okay, and it's going to be really, really awesome. I'm about to go through something. I'm going to reveal something to you guys today that's taken me about at least 15 years to learn throughout working on Wall Street desks and other places like that. So what I do is I help traders and active investors reach a level of consistent profitability that they never thought possible. Did you know that the reason why most traders are not making money is because they simply just overcomplicate things? That's right. Most traders make things much too complicated. So today, what I will show you guys is a highly profitable three-pronged trading approach that has not only made me a ton of money over the years, but it has also already allowed hundreds of traders just like you to live a life of financial freedom, really, by reaching consistent profitability. How would you like to, let's say, be able to get up in the morning and not care which direction the market is heading because you know you have a simple, trustworthy, and most importantly, a repeatable process that consistently keeps you on the right side of the market? Furthermore, how would you like to be able to do this like I do from, let's say, your beachside hotel room here in Florida or your slopes hotel in the Alps? And that sounds a little bit silly potentially, but it's actually a very realistic lifestyle to have if you learn this straightforward three-pronged trading approach that I'm going to show you guys today. Financial freedom is what many traders aspire to, no doubt, and I am certain that my three-pronged trading approach will be able to help you as well. Success as a trader really isn't that difficult, and with the approach I'm going to show you guys today, I know that everyone can do this. So let's just one or two words about myself for a little bit of perspective more than anything. Like Hubert said, I've originally come from the sell side of things, known as Wall Street, then ultimately moved over to the buy side, and for the past 6 years have run my own shop, which has been just an enlightening and just wonderful, wonderful journey. I have been very fortunate to work with some of the best traders in the world, and that has allowed me to give a lot of perspective to see what works. I've also had the opportunity to work in multiple asset classes, from fixed income, which is what I did at my alma mater at JP Morgan as a derivatives trader, and ultimately, of course, also stocks, options, and other instruments. So now I'm very fortunate to be able to pass this knowledge all on to my students, my clients, and of course the broader audience such as you guys here right now. So that's just a couple of words about myself so you have a little bit of perspective. And while I do this, let me just quickly pull up the question box so I don't forget to take all your questions. All right. So as I said in the introduction, I'm all about keeping things simple and in terms of trading and investing, and I think it really doesn't have to be complicated. In fact, if you make it too complicated, you fall into the trap that most traders do, because what most people do is they look at too many conflicting data points. So what that does is it confuses them, because what we need to be able to do to be successful at trading and investing and many things in life is to be able to eliminate the noise, especially in this day and age where we have our iPhones and our tweets and emails and whatever else is popping up all the time. It really has become more difficult to eliminate the noise. So the more straightforward your process is in trading and investing, the easier it's going to be for you to be able to eliminate that noise and stick to your actual trading plan. Okay? The very best professional traders have a very simple but a repeatable process. In fact, if you look at the traders on Wall Street, for example, the trading desks at JP Morgan, most of the guys are only trade like one or two instruments. Okay? And some of the very best traders I know in hedge funds and other places, they only actually trade one, maybe two strategies. So if the very best traders and investors only focus on one or two strategies or one or two sort of assets, why is it that the investing public tries to become a jack of all trades? Think about that. I strongly believe that the best way to make money in trading and investing is to become an absolute expert at one or two types of setups, and then you look for those across the universe of stocks, indices, and other types of asset classes. All right. Like I said before, what I'm going to show you guys today is a highly effective and repeatable three-pronged trading process. I know everyone can do this, and I'm going to make a big claim here, but I've seen so many people come away with this aha moment. I believe from this presentation, I believe that by the time we're through this in the next 55 minutes or so, it's literally will have changed the way they look at the financial markets. Okay, it's a big claim, but I'm sure plenty of you are going to come away with that. All right, so what are we going to talk about today? We're going to talk about identifying investor mood, and that's really something we're going to look at through the lens of price action. I think it'll be very, very enlightening to all of you guys. Then we're going to look at the markets in multiple time frames, and then, guys, I'm going to reveal to you my B2 reversal indicator. Something has been in the making for, you can probably say up to 5 years at this point, and it's very, very exciting, and also my B2 reversal scanner. So let's get started with all this stuff. Now, I'm going to give you guys a little bit of perspective on candlesticks. How many of you guys in here are a little bit familiar with candlesticks or not at all? What I'm going to do is I'm going to give you guys a little bit of perspective, but we're going to look at candlesticks today in ways that you most likely have never looked at before, okay, in what I call an extremely high probability way of looking at candlesticks. So just bear with me. So number one, let me say that I think there are way too many candlestick patterns out there to learn them all. Number one, the reality is that only a few of them actually work consistently, okay? Only a few of them actually work consistently. There's so many folks out there and so many books that try to teach you these things, and they're, you know, hundreds of pages long and all these different names and things. The reality is most of them don't really pop up often enough for them to actually be of any interest to you. So we're just going to focus on the ones that actually work. Like I said before, we're going to keep it simple and straightforward because that's going to allow you to stick to your process. So focus on the ones that work. Let's quickly go through the basics of what a candlestick looks like. If you've seen this before, or if you know what a candlestick is, just, you know, this will be a good review. If this is new to you, this is going to be really, really awesome. So essentially, we can have either an up day or a down day, right? And let me quickly maybe say that before we go any further. Candlesticks can be used in any time frame. So this can be used in an intraday time frame, like a 5-minute bar chart, can be used in a daily chart, in a weekly chart, in a monthly chart, and so on. And it can be used in any asset class, okay? And we'll touch on this a little bit more in just a minute. For today's purposes and to keep the presentation uniform, I'm going to focus on daily charts, okay, daily time frames, and we're going to focus on stocks as examples. But again, this can be used in any asset class and any time frame. So this chart, this bar right here is what we call a down day. You can see we had an open here at this level, but the daily close was down here. Well, the intraday range actually extended above and below that open to close range. The opposite, of course, would be an up day, right? We had an open here and a higher close. And again, the intraday range extended beyond the open to close range. The most important part of this high, low, open to close relationship to me is the close of that bar, in this case, the daily close. Okay? Does that make sense so far? It's really, really important to understand. Ultimately, what we want to look at is a relationship of the daily close to the other 3 points of the day, the daily high, the low, and the open. Okay? Let me make this even simpler for you guys in just a minute. First, though, let me just point out something that's really important. I think that's something that gets forgotten in all the technical analysis stuff that's being taught out there. And that is that about 60% of us have an easier time learning something by seeing a series of pictures. Okay? Now, that is more an academic number, like the 60%. I actually think in my own proprietary studies, it's been more like 80+% of people who have an easier time learning stuff by seeing it as a series of pictures. Like I think of my daughter when just a couple of years ago when she was 3 years old, it was much easier for her to grasp stuff by seeing a series of pictures clearly because she doesn't know how to read yet. But you can apply that same logic to us. Like I know me, for example, if I see a bunch of pictures, like for example, if I put together an IKEA furniture and there are these little graphics and these little guys putting stuff together, I have an easier time following that than having the written format. Okay. Now the thing about candlesticks is that they're very visual, and they're exactly doing that. They're helping us understanding stuff in the markets much better than if we were just to get like an algorithm or something, some code or something like that. Okay. So the candlesticks are much more visual than bar or line charts. They clearly give us a representation of what's taking place on the chart, and what they really do, and this, if there's nothing else you take away from my presentation today, this is the thing you want to remember. What the candlesticks do, the way I look at them, and that's why there's so high probability, the signals that I get, the way I look at it, is I look at the candlesticks through the lens of investor sentiment and footprints. Okay, I look at price action that's being displayed to us by the candlesticks, but I look at that price action and see what it's telling us through the lens of investor psychology and investor sentiment. Okay? Let me continue along this line. This is very important. Maybe take a picture of this, take a screenshot, whatever you want to do. This is really, really, really important. And honestly, the vast majority of people do not do this. And that's why they're getting confused. So let me continue along the same line. A little bit more about candlesticks. Well, the reality is, besides the fact that they just work, the formations are very, very straightforward to spot once you have trained your eyes. But again, we're keeping it simple. We're not learning thousands of different formations and funny names like J-hook patterns and all these things, because they're not really telling us much. What's important is that we look at all that price action through the lens of investor psychology. Okay? Let me continue and explain a little bit more what that means. The candlesticks allow us to do decision making without any emotions. Okay, it's all about having very defined risk and clear stops before we get into the trade. Okay, and that's the key. So the reason I chose this picture here is because this person has some very, very well-defined risk. You can see if he or she gets beyond this point of no return, her risk goes from 0 to 100% in an instant, right? And it's the same exact thing with candlesticks. If the price that we're looking at, let's say on any given stock, goes above or below a certain point, we know exactly what to do. Okay, we have very well-defined stops, and it's visually placed. Okay, and that's the real benefit of candlesticks, the way I look at them. Okay, so let's look at a couple types of candlesticks to illustrate this all a little bit better. So here we have a bunch of what's called hammer candles. And again, to keep things simple, and because I don't think it has to make it any more complicated, these are all different types of hammers. I'm telling you here right now, if you're going to learn all four, these are making it much too complicated. The realities are all more or less the same. In fact, to me, they're all exactly the same. So let me show you guys why. Let's look at this hammer candle up here, and let me give you a bit of an example. Let's assume this was a stock, and this stock had been dropping for the past, let's say, few days or the past few weeks. Maybe it's even dropped for the past few months. So the bears have been completely in charge of this stock. Well, they came into this day. The stock actually opened here, but on an intraday basis, the stock dropped all the way down here and then completely reversed higher, so much so that it actually closed at the very upper end of its trading range, or at least somewhere within the upper, say, third or quarter or quadrant of its daily trading range. Now, there's two ways we can look at this. We can look at this sort of the financial media way, which is sort of like to say we're off the lows, okay, which is not incorrect, but it's completely understating what actually happened here. The way I like to look at this, and what I've done for the past 15, 20 years, depending on how you measure it, is I've learned to look at this through the lens of investor psychology. If you look at this through the lens of investor psychology, you read it as follows. We have a stock. It's been dropping for the past few weeks. Okay, let's assume. The stock opens here, but it drops lower. The bears completely fail to keep the market down, and the market reverses higher. What has happened is that the bears who have been in charge of this market for the past few weeks tried their very, very, very best to push this market lower one more time. Okay? One more time. But they failed miserably, so much so that the sellers got completely exhausted down here. Again, after a multi-week downtrend, they tried it one more time. They failed to keep it down. The bears exhausted themselves because the point of maximum bearishness had been reached in this time frame for right now. Then, when that happens, there's really only one thing can happen, and that's for the stock, in this case, to go higher or at least go somewhat sideways. If you can consistently pinpoint the extreme emotions in the market, the extreme bullishness and the extreme bearishness, you are going to see your profits take off instantly because you have a very high probability point to determine where the bears are exhausted and the bulls are exhausted. Okay, so we're looking at this through the lens of investor psychology. Are you guys following me so far? This is really, really, really important, okay? And already I'm seeing some light bulbs already go off with many of you guys. Let's continue on with another example. Let's again assume this is a stock, and I'm going to give you guys a bearish example just to mix it up. Let's assume this was a stock and it's been rallying for the past few days, weeks, maybe it's been a few months. Okay, the stock comes into this day here, gaps higher after having already rallied for the past few months, gaps higher one more time, but completely reverses lower, so much so that it completely engulfed the previous day's price action. Now, I said you guys before that to me these names of the candlesticks patterns are really not important. In this case, I will tell you the name actually does fit the description. Okay, it's engulfing, but let me tell you why. Much more important is why the name is just a name. So again, let's assume we had this move take place, and you look at this through the lens of what I usually see the financial media spin this, and it's just they would call this kind of a day we're off the highs, or we closed well off the highs. Again, it's not an incorrect statement, but it's completely understating what actually truly happened. What actually truly happened is that the bulls have been rallying the stock very strongly, gapped it higher one more time, but completely failed to keep the market up here. So the maximum point of bullishness in this time frame had been reached right here. When there are no more buyers left, okay, and that's why it's important that we had an uptrend for at least a few days, weeks, or months, and then a failed rally. When there is no more buyers left, there's only one thing that can happen, really, and that's for the stock to go lower, or maybe at least go sort of sideways to lower, okay? If you can continue to look at the markets through the lens of investor psychology and understand where the bulls get exhausted and where the bears get exhausted, you are going to not only start trading with clarity, but you can see your P&L curve just dramatically improve. Okay? Let's continue, and I'm going to give you guys a few examples. What we're going to do is we're going to look at some charts, and I'm going to go through some bullet points here on the left, and then we're going to zoom in on this chart, on these charts respectively on the right side of the screen here, one after another. Okay, so let me quickly go through a couple of bullet points. What we're looking at here is the S&P 500, which at the time here give us what I call a waterfall sell-off, just a strong sell-off, which ultimately was followed by exhaustion, selling, a strong bullish reversal, and bullish continuation buying. Let me show you guys what this was like. So this was the middle of October 2014. Who in here was active in the markets in 2014? Does anyone remember what took place in that period? Let me show you. So what happened, we had the markets sell off. The bears were very much in control of the market. They sold off heavily, and we came into the middle part of October. I guess it was like the 15th or 16th or so of October. And you can see what happened. The bears, after having been in control of this market for multiple weeks, tried their very, very best to push this market lower one more time. In fact, they tried to do it 2 days in a row. But you can see these long exhaustion candles. These are like similar to those hammer candles I showed you guys before. And they closed well off the highs of the day 2 days in a row, which was a clear signal that the bears were getting very, very exhausted because they've been in control of this market for some time. Well, guess what? On day 3, there was what I call follow-through buying, which scared the pants off of a lot of these bears down here, and it was blasting off to the upside. Again, we can look at this through the lens of the financial media, which is to say we're off the lows. But again, it's understanding to what actually happened. What actually happened is that the bears got completely tired and exhausted, and when there are no more sellers left visibly, you can see it right here, visibly, there's only one thing to do, and that's to basically buy, at least for us who are smart enough to take the other side of that, right? The best trades you'll ever make is by going opposite the crowd once they get exhausted, to be more specifically. Let's continue on to some more examples. Here we're going to be looking at the KBW Bank Index, also known as the BKX, which is representing banking stocks. Okay, very, very important to follow this for those of you guys if you have never watched the banking stocks. I would encourage you to watch this quite closely. Okay, So what we had take place here was a bottoming process, which was followed by exhaustion selling and ultimately a strong bullish reversal. So let me show you guys what this looked like. This was actually just about a year and 2 months ago or so. If you guys recall, initially we had a very strong sell-off in August of 2015, which was then followed by sort of a choppy sideways consolidation range. But look what happened here in one of the first few trading days of October of last year. We had an initial sell-off that tried to take place where the bears tried their very best after having been in control of this market for a couple of months. They tried their very best to push this market below those August lows, right? But you can see what happened. They miserably failed to do so. The bears had no more power left to sell this market. The very next day we had an up gap and rally day, and it was off to the races. So again, we can look at this in two ways. We can look at this and say, okay, what we saw here was essentially, a move off the lows. We're off the lows, but again, it's completely understanding what actually happened. What has happened is that after having been in charge for multiple months, the bears tried their very best to push this market lower below these lows, miserably failed. There were no more sellers. You can see they really tried to push this market lower, visibly failed to do so, gapped the market higher the next day, and was off to the races higher. Okay? Let's look at one more example. This is what we call the Spider Gold Trust ETF, or the GLD. I'm sure plenty of you guys are familiar with this. Okay? What we had here take place was ultimately a topping process, which was followed by exhaustion selling, a strong bearish reversal, which was ultimately then followed by follow-through selling. So let me show you guys what this looked like a little bit more closely. So again, this is the GLD ETF, and you can see at the time here we had a multi-month rally take place, and ultimately we came into this part here. This was like at the middle part of October 2015, and after an initial or a last sort of multi-week blast higher, the bears started to get exhausted. Now there's already an initial bearish reversal signal here from a candlestick perspective, but to me, I like to focus on the really, really obvious stuff, okay? So you can see what happened on this day. This is really what you want to focus on. Again, we try to focus on the most important, the most obvious things and pretty much ignore the rest. We want to keep it simple and straightforward because that's how we can have a repeatable process in place. So what happened on this day is that the bulls, after having been under pressure for a couple of days, but mostly had been in charge for the past few months, specifically the past few weeks, they tried their very best to push this market higher one more time. You can see they literally tried to probably get it back above to these highs or maybe higher, but they miserably failed to do so. So again, we can look at this through the lens of the financial media kind of, terminology, which is to say, we're off the highs, back to you. Well, again, yes, that's not incorrect, but it's totally understating what actually happened. What happened is the bulls tried their very best to push this market higher, miserably failed to do so. The market completely reversed lower, so more so that it completely engulfed the previous few days of trading action. The next day we had a gap down lower, and it was pretty much off to the races lower from there. Okay? So let me give you guys one more example, and then we're going to get some really, really awesome stuff that I'm sure a lot of you guys have been waiting for. Here's the chart of Hewlett-Packard. I'm just going to go right into the example and show it you guys right here. What we had here is Hewlett-Packard. They had the initial gap down, and basically the bears had been in charge for some time by the time I got to this point right here. And you can see that the bears tried their very best after having been in charge for, I guess, a month and a half or so to push this market lower one more time. You can see closed it well off the lows, and the very next day we had a very, very sharp gap. Wasn't an up gap, it was a very, very strong rally. Now, again, what we can take away from this example is that the bears got exhausted visibly, right? They closed off the lows, but none of this was confirmed until we actually had a strong follow-through buying day, okay? And that is what literally like 95% of people or more do not do. They never wait for confirmation, but they also don't have the appropriate perspective needed from what I just taught you guys over the past 25 minutes or so. I'm going to show you guys a lot more really awesome stuff here to really hit this home. Okay, we have seller exhaustion, which told us that the bears got exhausted, but none of this was confirmed until we actually had a follow-through buying day. Okay, now let me give you guys a little bit of sort of framework within which to put this process. I call it my 3 steps to the trade process, and I want to encourage you guys to write this down. I actually believe strongly that unless you have perspective in the market, it's really difficult to make money. So step number 1, I think it's important that you understand a little bit. You don't have to be an economist for this. In fact, I think if you do, you're probably doing more harm than good to yourself. But you have to have a little bit of perspective. So what does that mean? That means, for example, where are we in the business cycle right now? Where are we in from a monetary perspective, right? So once you've got that sort of mapped out, you can then start looking for trades that actually should work in your favor, which is then step number 2. In other words, once you have an idea where we are in the big picture, are we bullish, are we bearish, what's going on in the business cycle, very basic stuff, you can start trading, looking for stocks that generally tend to do good or bad in that type of environment. And step 3, you use that strong bullish and bearish reversal. Let me quickly show you guys what this means. Right now, for example, we are in a bit of a precarious environment where a lot of economic indicators have been slowing down. But now we've had a bit of a surprise a couple of weeks ago, and things have quickly, not just from a price acting perspective, but also from an economic data perspective, started to look somewhat better. So from my perspective, and this is not advice, this is just giving you my sort of roadmap, I actually think right now we are potentially getting back into a new cyclical bull market for equities. What that would mean is that from a step 2 perspective, you'd look to be a buyer of sort of more, economic pro-growth type of things like, cyclical stocks, stuff that tends to do well in the early stages of a cyclical bull market. And then step 3, you look for those very strong bullish and bearish reversals like I just showed you guys for the past 25 minutes or so. Now, let me give you guys one more little secret hint. You can actually reverse engineer this entire process. Let's just say you come across a very strong bullish or bearish reversal for that matter here in step 3. Well, if you see that, make sure it does fit with step 2. In other words, with this group of stocks or whatever assets you're looking at that tend to do well in step 1. Okay? Got it? I hope you guys wrote this down. Maybe you took a picture of it. This is really, really important stuff. Now, what we're going to do is I'm going to give you guys a little bit of perspective on those very charts I just showed you guys. Okay? This is the S&P 500. We're going to do step 1, 2, 3 here. All right? If you guys remember before, I showed you the S&P 500 here in October 2014. Okay? That is step 1. To understand that if we had zoomed out on this chart, we would have seen that the 2014 October lows, once we had the bullish reversal, actually coincided with the 2011 uptrend. I remember getting a lot of phone calls from my clients around the world in just about this time of year, actually a little bit before then, and they were all freaking out. They're saying, hey, we're about to break trend. We did break trend. And I said, guys, listen, number 1, let's actually wait and see what's taking place on a weekly closing basis. But more important, keep in mind that at the time here in 2014, the economy was still somewhat expanding. The Fed was still somewhat dovish. They were accommodative. And from a technical perspective, we came right back into trend. Once we had a bullish confirmation take place, like I just showed you guys, I gave my clients the green signal. I said, listen, we're good to buy again here for some time. We did, made a lot of money, and it was happy days. So step 1, 2, 3, very important. You have to have some perspective. Okay? Let's look at another example here. This is the BKX index, or the KBW Bank Index index that I showed you guys before. The point in time I showed you guys before was actually this right here. Okay? And that was actually a multi-year support line. Now, let's understand what happened. This is actually just about a year and a couple months ago. What happened then is that the Fed got quite hawkish. Okay, they were starting to threaten an interest rate hike, which of course ultimately they did hike last December. And the anticipation of that was good enough to start rallying banks, because banking stocks tend to do well when the interest rates are somewhat rising, or at least when the curve is somewhat steepening. Okay, don't want to go into too much detail on that, but the basic gist is that they were giving us a bunch of hawkish rhetoric, and that ended up being bullish for banking stocks. Now, if you had the perspective and you've understood where you are in step 1, it would have been much easier for you to buy this dip that I showed you guys in the previous daily chart. But if you also zoomed out for step 2, you would have also understood that where we've come to on a weekly closing basis here at this horizontal support area. And step 3, you can see the strong bullish reversal not only in the daily chart but also in the weekly chart. Okay? All right. Now, let me get to something now, guys, that I have been working on for the past 5 years, and this is going to be seriously, seriously awesome. I get so excited about this stuff. I got very excited yesterday at Thanksgiving dinner thinking about this. So what I do not want you guys to do is focus on just, say, 3 or 4 stocks, or 1 or 2 commodities or something like that, and then take every single signal that you get. And here's why. The reality is that real high probability trading signals only show up every so often in any given stock, index, currency, or commodity. Okay? And I mean really high probability, not like, this may work, this may not work. Like stuff that's 80, 90% sure to work. Okay? So instead, because this is a low probability strategy, okay, instead, what I would like you to do is this. Understand that the world is your oyster, which is to say that you need to find a high probability strategy or a signal like I just showed you guys, and then you look for that signal to occur across the universe of stocks and or commodities, currencies, etc. Does that make sense, guys? This is a seriously, seriously important point. Like, it's at least as important as the important point that I mentioned before about looking at candlesticks through the lens of investor psychology. Okay, there's a huge difference between doing this, looking at just a couple stocks and looking for every darn signal you may or may not get there, and this. This is, in my opinion, once you've got a strategy, this is the deciding factor whether you're going to be successful in this business or not successful in this business. This is it. Okay, this took me about, I don't know, man, this honestly took me at least 10 years, probably 12 or plus years to understand, at least. So I'm going to give it to you guys right here. Okay, so this is really, really important. Now, let's quickly summarize what I talked about before about these strong bullish and bearish reversals. Well, the strong bullish reversal is where sellers get exhausted, and the strong bearish reversals is where buyers get exhausted. Okay, if you can start to think about the markets that way, as opposed to naming whatever funny candlestick pattern may be occurring, understand what's actually taking place, because the name of the pattern is completely and utterly unimportant. What's important is what's actually taking place through the lens of investor psychology. Okay? So what we need to do, that is upon price confirmation, okay, and this is another thing that most people don't do, once you've got a strong bullish and bearish reversal, upon price confirmation, this is when the highest probability points to buy or sell any given stock, commodity, currency, what have you, takes place. Okay? So let me continue along this and get to the really awesome stuff. I have developed over the past, like I say, it's been nearly 5 years that the concept didn't work, my so-called B2 reversal indicator. And I have this indicator, and I always was a little bit skeptical, in fact, very skeptical of indicators and scanners coming from an institutional side. That was never really my thing, because I tried so many things out there, and they really just didn't, most things just didn't work for me, okay? So I decided to, one day I actually met a colleague of mine, or a friend of mine that I went to high school with, who became a programmer. I was like, listen, I've got this thing. Do you think we can program this? And we mapped things out. It took us a couple years, and ultimately we found something, and it's been nothing short of amazing. So we have now programmed what I call my B2 reversal indicator, which gives us these high probability, straightforward buy and sell signals on a chart based on these strong bullish and bearish reversals. Okay? The thing with making an indicator, for those of you guys that may or may not be familiar, is if you make it too complicated, you're going to get hardly any buy signals. If you make it too simple, you get way too many buy signals, or way too many invalid buy or sell signals, I should say. Okay, so it took us a long time to get to the point where we have these high probability signals taking place frequently enough, and that they're only the highest probability ones that actually take place, so that people don't get confused. And we now have that, and I'm so excited to be using this now. It's absolutely beautiful. So let me show you guys a little bit more about how this works. Let me give you guys a couple of examples. For example, here's Tesla. Okay, and the way the indicator works, it literally just gives us these super beautiful sell signals by way of these down arrows and buy signals, as you see in just a minute, with green arrows. So for example, here's Tesla. Okay, give us a sell signal at this point here early this year. In a matter of a couple of weeks, the stock dropped about almost nearly 20%. Okay. How about this? In Whirlpool, ticker symbol WHR, we got a whole bunch of signals already this year. We had a sell signal take place here. The stock dropped about 13% in a matter of a couple of days. Then we had a buy signals a few days after that. The stock rallied 15% over the course of a few weeks. Then we got a sell signal immediately after that, and the stock dropped about 15+% over the course of a few weeks. Okay, so you can see this is really, really awesome stuff. Let me show you more. Starbucks, for example, this was just at the end of August, gave us a beautiful sell signal here, based upon all the stuff that I just showed you guys today, and a couple more little secret sauce ingredients, and the stock proceeded to drop about 7.5% or so over the course of a few weeks. Okay, really, really, really cool stuff. So let me do this now. Let me show you guys another example. For example, this is IMAX. Okay, this actually just signaled a number of weeks ago. I guess at this point it's been like 5-6 weeks ago, and I shared this with my Clubhouse members at the time. You had a very strong bullish reversal, like I showed you guys before. Sellers got exhausted. We had confirmation buying. It was off to the races. It was signaled by the indicator. Okay, and I'm going to show you guys where this works. Some people are asking me a lot of good questions already. Yes, Brian, the indicator, I'm going to show you guys in 1 minute, it works on futures, it works on forex, it works on stocks, indices, it works on anything. It really works on anything, and it works in any time frame. Okay, and I'll show you guys future charts in just 1 minute, just so you know. Okay? So how about an Apple here? This is just a little bit while ago as well, with a beautiful buy signal take place here based upon the strong bullish reversal, based upon the strategy or the sort of methodology that I just showed you guys over the past nearly 35-40 minutes, based upon these strong points where the bears visibly get exhausted and the bulls start taking over, and vice versa. Apple here rallied about 8% over the course of a couple days after a strong bullish reversal. Okay, now I also have what's called the B2 reversal scanner. Okay, and the B2 reversal scanner is really, really, really amazing. So once we have this B2 indicator programmed with my friend, I said, you know what, if we have this indicator, wouldn't it be awesome if we could somehow just make it so in the morning I come in and I open up my trading platform, whatever that may be, right? And I just have these scans already there with all these super high probability trades set up. Well, it took us another while to do so, but we ultimately did it, and it's been really, really nothing short of amazing. Humans are wired to be lazy. I don't consider myself to be a lazy person, but I like the things to be convenient, right? So why spend hours each day looking for buy or sell signals when you can just, you know, have it handed to you on a silver platter every single day, week, month, whatever your time frame might be? Okay, so what this thing does, it actually allows us to scan for these super high probability trading setups with literally one simple click, and it's even easier than that. I'm going to show you guys right now how that works. And by the way, what this has actually done for me, and I've been a trader for nearly 20 years, it has dramatically reduced the trade idea generation time for me every single day. I used to spend honestly about 2 hours a day looking for trade ideas. I now do this in, honestly, God, less than 15 minutes every single day. The trade idea generation, okay, and it's just been awesome. So let me quickly show you guys what this looks like. So this, for example, here is the scanner that in this case it's for Thinkorswim. I'll show you guys in a minute what platforms this is working on. But you can see it literally just gives these beautiful buy and sell signals. And let me show you guys how this works. So this basically looks like coming into the morning, and I just pull up my platform. In this case, this is Thinkorswim, and I literally just click on these tickers that show up, and I have a chart next to it to see if there's a bullish or bearish reversal taking place. If there is one, then it's qualified. I buy. If it's not, I don't. If it's a sell signal, I sell. It's very simple. Okay, so I'm actually going to show you guys what this looks like right here. Like, for example, we have one of them that I just came across earlier today that is in progress of giving us a qualified signal. So like, for example, here's like, for example, a bullish engulf, or actually, I think it was this one here. Let me show you guys. It was this one. It was a bearish example I wanted to give you guys just to mix it up a little bit. And I'm going to show you guys a ton of examples here in just a minute. It's this one. So literally all I do is I take my watch list, in this case I click on ADP, and I actually saw that there's a bearish reversal in progress. It's not yet complete, but it's in progress and it's not yet confirmed. That's literally all I do. I just click through these and I look if there's qualified buyer sell signals. Okay, that's all I do. And it's super, super awesome. So let me show you guys a little bit more about how this works. Now we're going to do some live examples here as well, which I actually want to do right now. Let's do this right now, actually. Let's do this right now. So I want you guys to give me some tickers. Give me some tickers that you want me to look through, and show you guys if there are bullish or bearish reversals based upon this indicator. Before we do that, though, let me quickly do this slide here and just quickly summarize what we've talked about so far. Candlesticks, the way I look at them, show you investor footprints and emotions, okay? And that's very different from how a lot of people look at this stuff, which is why my stuff is so high probability. So what I want you to have is a straightforward and repeatable process, because that is really the way to consistent profits as a trader and an active investor. Okay, so the three-pronged trading process is understand the broader market structure, have a big picture idea of what's going on, scan for technically sound stocks and commodities, like for example with the B2 reversal indicator, and then you use my 1, 2, 3 reversal indicator as a trade signal. Okay, so let's look at some live examples. So let's see, a lot of good questions here. So for example, someone wants to look at Netflix. Okay, let's look at Netflix. Let me just quickly bring this up here. All right. So Netflix, for example, right now we had a buy signal take place here. It was confirmed a few days later. Let me make this a little bit larger. Okay. You can see the buy signal here. It was confirmed a couple days later. It was off to the races. Then we had a small buy signal here, which was barely confirmed, but it was. And now we're developing, it's not yet confirmed, a sell signal. Okay. For those of you guys who are asking for Netflix, that's the example there. Let's do a few more here. You guys wanted to look at cost. Oh, Target. Yeah, sure. Let's look at Target. Okay, how about that? So Target, you can see, for example, most recently we had a beautiful sell signal here, which was confirmed a couple days later, and the stock continued to drop. Then these were invalid ones because there was no follow-through selling, or only to the bottom of the range, and I'll teach you guys just a minute how that works. But then we had a beautiful, beautiful buy one right here. Look at this. Look at this strong bullish reversal confirmed the next day and off to the races. Does that make sense so far, guys? Cool. All right. Let's do more examples. How about someone wanted to look at commodities before? Okay. Well, let's look at some commodities. Let me see. Let's look at, for example, oil. Okay. So how about oil? Here, look at the buy signal we got in August. Strong bullish reversal, boom, off to the races. Bearish reversal here, and it continued to drop. Buy signal, boom, to the upside. Okay? Really cool. Intraday, you guys want to look at intraday as well on this? Anyone want to look at intraday, like a day trading stuff? Okay, it works intraday as well, just so you know. Let me show you guys this real quick. So you want to look at the SPY, is that good enough? Let's look at the SPY. Okay, let's look at the past couple days, like this. Okay, and this also has the overnight session in it, so you can just ignore that overnight stuff. But the day sessions are here. So look at this. This was I guess this was the other day. We had a sell signal here. It was confirmed a couple bars later. Then look at the buy ones here. The real confirmation was once you have confirmation buying, which took place here, off to the races to the upside. Some small bearish ones against the trend, then strong bullish reversals here, and then the market was sideways here, so it didn't. You want to trade a sideways market, so it's not going to work in sideways markets. Well, it actually does work sideways markets, but it only works in little small ticks. Okay. Okay. Let's look at some currencies as well. Sure. I'll show you guys this in 1 minute. All right, so actually let's do this. Let me continue, and then I want to take a lot more from you guys. So what I'm going to offer you guys is my ultimate candlestick bootcamp, including the B2 reversal indicator. So what you're going to learn here is my institutional three-pronged trading approach. Okay, you're going to learn a low-stress high probability swing trading method, and you're going to learn how to nail these bullish and bearish reversals with serious confidence by reading investor sentiment and emotions using candlesticks and more. What this is, guys, is a 11-part recorded video series. Each video is like 15 to 30 minutes long. It includes a 30-page course guide. Usually I sell this for about $500. Today, we're going to sell this for just $197. You can go to thestudytrader.com/Friday. And yes, this works on futures, it works on currencies, it works on stocks, indices, in any time frame as well. So I'm going to give you guys more examples in just 1 minute. Okay? So that's what this is. And today, we're also going to throw in the beta reversal indicator. Let me show you this in 1 minute. Let me quickly say that before we get to that, I don't think this is for people who can't make their own trading decisions. I don't think this course is for those kind of people. I don't think it's for people who are in this for like entertainment purely. This course and this indicator are for people who really truly want to learn how to make money in the markets and become not only independent traders but also ultimately financially independent. That's really what this is all about. And the way I use it, that's exactly the way I started why I started programming the way that it's now come out to be. We've got some customer testimonials here as well, of course, but basically what the bootcamp itself, the actual series of videos includes is as follows. Again, all variations of bullish and bearish reversals, not just the ones I showed you guys. There's a lot of other high probability ones, okay? I'm going to show you guys how to use candlesticks to trade in the direction of the trend and how to trade it against the trend as well. You're not going to have to learn hundreds of candlestick patterns, not at all. We're going to focus on the super high probability stuff. You're going to learn my rocket launch and gravity pull setups. You're going to learn how to use multi-time frame analysis, guys, confluent zones as well. This alone is worth like thousands of dollars. It's serious. Multi-time frame analysis and confluent zones, guys, is so important. Okay. Also, you're going to learn how to do sideways channel breakouts, wedge and flat breakouts, all sorts of other technical stuff in there as well in the course to give you guys perspective, support and resistance lines, moving averages, and Fibonacci retracements as well. Ultimately, there's a little bit of money management as well, where to set your stops, risk management, the mental aspect of trading, and just a ton of stuff. The beta reversal indicator itself is available for a bunch of platforms. I'll show you guys this in the next like 2 slides. What the beta reversal indicator does, it is showing you guys qualified beta reversal signals that flash on your charts and or your watch lists. So literally all you have to do is open up your platform and the signals are right there. Okay? It works on all asset classes and it works in all time frames. Okay? Now today I'm going to throw in the beta reversal scanner for free. So what you can do, you can literally just come in and look for these trades. It's an absolute breeze. All right. What is it available for? Okay, there's all the questions here. Guys, it's available for Thinkorswim. It's available for eSignal. It's available for TradeStation. And it's available for NinjaTrader. And for TradeStation, or for NinjaTrader right now, it's available for 7, and I believe 8 is going to be ready in the next couple days. Okay, I believe those are the versions. So that's what that's what the platforms it's good for. Let's see here. Kurt, yes, it's not available on Schwab, but if you guys have other, yeah, it's available for all the TradeStation formats, so you should be good there. And if there's enough people that want to have it programmed for another platform, just shoot us an email, support@thestudytrader.com, and we will certainly take that into consideration. Okay, so again, what this includes is my 11-part recorded video series. Okay, the 30-page ebook, and of course the beta reversal indicator and the scanner, and it's available for these platforms right here. Now let's go through some more examples. Let's see. Yes, and you can use it on multiple platforms, absolutely. So you don't have to buy it multiple times. Okay, if you buy it once and you can load it up on all these platforms. So if you have Thinkorswim, you can also download it for TradeStation and so on and so forth. Okay, so let's go through a couple more examples here. And again, this is the offer. It's just $197. thestudytrader.com/Friday. So this is our Black Friday offer. I'm going to quickly type it in as well. Here /Friday. go. Rock, it's not going to work on the Saxo platform. I would highly encourage you to get something like an eSignal or any of these platforms. Saxo doesn't allow us to program for them. Okay. All right, so let's go through some more examples here. Let me show you guys some more stuff so you see that I'm not just making this stuff up. Let's see here. Hey, Hubert, I think you have your microphone on. All right, let's see here. It's not available for interactive brokers either. I've had a difficult time trying to get stuff programmed for them, but all these platforms here it's available for. So the accuracy, what's the accuracy of the signals? The signals are about 80% accurate, but you have to if they're qualified, it's more like 90% accurate. So let me show you guys what this means. This is a one-time payment only. Yep, one-time payment. So it's just $197. That's it. You don't have to pay the multiple indicators. It's just one time, and you can download them all. Okay. So, like for example, let's look at the S&P 500 as well. So look at the SPY. Okay, let me get rid of some stuff here. How do you remove these things? Here. So look at the S&P, for example. Look at the buy signal it gave us right here at the February lows, which was confirmed a couple days later. Okay, and the reason why I'm doing this along with the course is because in the course you guys are going to learn how to qualify the signals. Okay. That's why it's so important that I'm offering it along with the course, or I'm offering the course along with the signals. Okay. There's no cost for upgrade, Brendy, excuse me. This is it. Like if I do future versions, you don't have to pay for future versions. Let me show you guys a couple of things. Like for example, Microsoft here. Someone was asking for Microsoft signals. Okay. So just over the past couple of months, we had beautiful buy signals take place here, sell signal here. Then look at the sell signal we got here at the end of October. So it's just beautiful. It works so nicely, right? Let's see here. What other things did you guys want to look at? Yes, triple L. Yeah, L3 Communication had a beautiful buy signal just the other day, which was confirmed actually just yesterday. So this is a brand new buy signal that was confirmed not yesterday, Wednesday. Okay. This is L3 Communication, just so you know. These are when the markets go sideways, you don't want to trade in general. So that would be my currencies, right? So I want to look at currency. Let's look at dollar Swiss franc, for example. Okay, I mean it just works like a charm. Look at this sell signal here, confirmed sell signal in June, it drops. Confirmed buy signals, it rallies. Then unconfirmed buy signal, confirmed buy signal here, it rallies. These were unconfirmed sell signals, then we had a confirmed sell signal here again, and it falters. So it works for currencies as well. Yeah, so guys, what happens when you purchase this, you're going to get an email with all the instructions. There's going to be a video made or written instructions, depending on which platform you use, that will teach you how to install it. Okay? So as soon as you purchase, you get a confirmation email, and if you have questions with it, you can also send us an email, and my support guys will help you work through this. Okay, so this is really, if you guys want to simplify your process and you want to stop guessing and just taking high probability signals, guys, this is it. I mean, this is, like I said, nearly 20 years of my professional career in this business. It's taken me a long time to just get to the point where I want to make an indicator, but initially I made it for myself. I had no intent to sell it, but then I figured, you know what, let's give something back and see how it works. By the way, another couple of beautiful examples, Allstate, for example, just gave us some beautiful signals. We had a confirmed sell signal here just a little while ago, a beautiful confirmed buy signal just a few days ago here, and the stock is off to the races here. Let me zoom in on this. See the buy signal we got here? If you would have taken that buy signal, which was confirmed at the time, you would now already be up about 6% on Allstate. Yeah, Target, sure. Look at Target, for example. Beautiful buy signal here the other day. If you would have taken that signal, then you're now up about 12% on that stock. Okay, so let's see. Okay, weekly charts. Yeah, let's look at some weekly charts. Weekly, because it works on daily, weekly, intraday. It works on anything. It really, the time frame is not important. So, guys, want to look at Bank of America. Let's look at Bank of America. Okay, you guys want to see some beautiful stuff? Look at this. Look at, for example, again, you have to look for the confirmed buy signals or the confirmed sell signals. We had a confirmed sell signal take place here. Okay, and the market proceeded to drop. Now, this is a weekly chart. We had a beautiful confirmed buy signal at the late June lows. Look at that. If you would have taken that buy signal, this stock is now higher by about 56%. Okay, this was an unconfirmed sell signal. Okay, and then we had another confirmed buy signal here in October, and boom, 30% rally. So it works on weekly charts, it works on daily charts, 5-minute charts. This is pretty good, guys. What do you think? Let me have some feedback. BN, this works on any time frame. It works on daily charts, weekly charts, anything. Okay. Okay. Amber is asking, how do you know if it's confirmed? Guys, this stuff is explained in the course. So the offer is thesteadytrader.com/Friday. You're going to get an 11-part recorded video series with this. Okay, it's an awesome course. Each video is 15 to 30 minutes long. You're going to learn how to qualify these setups. Okay, most setups are already qualified by the time you get them, but there's a qualification process you have to go through. Now, again, it's taken me nearly 5 years to do this thing, the scanner and the indicator, but it's important that you understand the process. You know, trading is not supposed to be easy. It's supposed to have a repeatable process embedded in it. And that's exactly what this does. When I come into the morning, guys, literally, I open up my platform. In this case, this is Thinkorswim. I get these watch lists, which are embedded scanners. I click on these things, and like here, I showed you guys before what it looks like here. Where's this thing? Let me go back to the thing here. And literally, I just click on the symbol, and I move over to the chart. Looks something like this. Oops. Here. This is what I do. I click on the symbols, see if it's a qualified signal. If it is, I do a trade. If it's not, I let it be and wait for another day. Okay? So that's the offer, guys. I know I'm literally out of time here. I'll give it like 1 more minute. I'll go 1 minute over. I don't want to eat into Andrew's presentation. But again, what the offer here is $197. Usually it's $500 for the 30-page recorded video course and the 30-page ebook, and of course the B2 reversal indicator and the scanner. So make sure you take advantage of this. This offer is only available for, I believe we can do 35 spots, and it's good for 24 hours. So you want to make sure you grab this now while it's hot. And yeah, it'll be available throughout the day, Brandy. It works in the E-mini HT. It works in the E-mini. It works in any time frame, any it works in any asset. It doesn't matter what the asset is. I mean, I've even used this back in the day when I initially started working on this. I used to use it on credit default swaps when I was a credit default swap trader at JP Morgan. So the videos are always accessible. They do not go away. Okay, so you should be all good there, Susan. All right, I think that's it, guys. I don't want to eat into Andrew's presentation, so which, by the way, you really got to listen to. He's got some awesome stuff to talk about. And I believe we can do a recording of this as well, Hubert, right?
Hey, Serge, it's Jeanette.
Oh,
yes.
hey, Jeanette.
There will be, obviously we're trying to make sure we get a recording, and sometimes things don't go exactly the way we plan them, but yes, definitely take us a couple days to get it all put together and out to all the listeners today.
Perfect. Well, thank you guys so much, and happy belated Thanksgiving, happy Black Friday. And I will pass it back to you, Jeanette.
All right. Well, thank you, Serge. And his link has been posted for all of you in our chat box. It's thesteadytrader.com/Friday. And I'm going to dismiss my friend Serge over there as a, the wrong one. Let's see.